We talked about these points last week. So basically what happens is kind of think of yourself as this is kind of a weird analogy, but we're going to go with it. Think of yourself as a famous boxer, right? You're this famous boxer from Spain. Everybody knows you, you're a champion. You come to America. Nobody knows who you are, but you don't know the American boxing system, right? So what you do is you go and you take fights out in back alley brawling fights and kind of these nightclubs where, if you win the fight, you win $500 a night, and that's what you make. So this is basically what I taught you to do, right? Like a champion can easily go take those fights all day long and make his $500. It doesn't mean he can step into the big leagues and make millions, but he's already a champion. He probably could do that, but he needs to, learn the system first, right? So this is kind of what we learned last week. Like we talked about some very easy information to ascertain, right? So just a quick little go through here. We talked about very easy information to ascertain, right? We have these hold levels and they're very, very simple. This is about the easiest stuff we could ever learn on the charts, right? You have your levels in here, which were first touched. If we look at the flow and the logic flow of how this happens, right? So this is going into data points, which we'll discuss in a bit. If you look at logic flow, you have data points, right? You already have a tested set of hold levels against another tested set of hold levels. So if this is tested and this is tested, the next one down should theoretically collapse, which it does. And then so we're just left with some very easy trades. Like I said, the boxer kind of analogy where it's just like, okay, this stuff is easy. I've given you guys a way to make very easy trades, great profits, yada, yada, et cetera, et cetera. These levels here are about as easy as they come. So that's why we start where we do, right? At that point, we talked about why this move was going to collapse. And if we do lose trend, right? This was that moment where we did lose trend. The move just completely collapses down. So we had adapted this trend. At first it was daily, which I believe was right here. But, we can actually find the point that it actually was. First it was right here, actually. I believe this was the weekly point. We're very close to it. So at first we have the weekly point right here, which you can see over the course of the week. You remember back when we talked last week on Monday, even, Mondays, the tone of Monday was, okay, we've closed this trend on the bottom side of it. In a few days, we could have a massive dump if we can't regain trend. So we already kind of knew the consequence, right? So this is all about data points. So this is why I'm going through this, is you'll understand when I kind of get to the conclusion here. We understood what the data was telling us, right? Like these points of information are nothing but data on our screen. So we have to extrapolate the relevance of what that data is telling us. So if we look at a very basic example with our trend here, we've actually wicked below the trend. We didn't knife catch the trend and it didn't move up like crazy. We actually moved below the trend. We back tested that trend to make sure the bottom side of it could hold. So fine. We're going to hard close adapt our trend out right now. So then you would be, come on, where's the point here? Then you'd be right here like this. You lose trend here over on this side. So you can see when you lose trend, the move is gone. So you have the weekly, you've adapted it to the daily. So we already knew that the weekly trend was going to distribute us. We already knew that once we start adapting it to the daily, the further we're adapting it, it's the weaker we're getting, right? Kind of almost the same thing as these hold levels, right? We start with a daily, we move down to a 12 or 4 hour, we move to an hour. By the time you get to an hourly hold, you're very close to breaking the move, right? You're extremely close to breaking the move. Data points tell us how to understand the information that's happening in moves, right? So we kind of hard close these candles, and then you could probably go to the moment where this thing loses trend, comes up, inverses off of this level. So if you kind of follow the trail of logic here, right? So you've got trend actually gets lost once again after it's been adapted. At this point, I don't think it was adapted here. I believe we adapted it, once it had garnished enough time through the trend, rides trend, loses trend, inverses the level, loses trend again, back tests it, and starts to fall right through. So you can see what the data is telling you. The data is telling you, hey, look, even here, you didn't really hard close an hourly yet, but then you hard close this hourly, and after that, it falls off a cliff, right? So like the data, you have to be able to extrapolate what the data is telling you and be able to read it as, even if you were to move this trend here, like this to here, you would see the moment it punctured through. Even if you were to hard close it to the hourly, you went to the daily, you could go to the 4 hour, you could go to the hourly, you could keep going down in time frames until there's nothing left. I'm sure you went down to I'm sure what happened is you went down to an hourly rate here and then here and somewhere 5 minute and then a 1 minute. And then, after 1 minute, it's just, there's nothing left to hold it. So, if we go back and look at what had happened with Bitcoin over here, right? Let's talk about why Bitcoin rejected this level. Because I know this has been a burning question in everybody's mind. Okay, so an easy way to see this, how can we talk about this, right? We're gonna do something here. What if we alt-eyed the chart? What does this look like? This looks like the backside of a hold level, right? So we talked about front side hold levels versus backside hold levels. If it had hit this hold level right here, let's go right here, or oops, let's use the drawing tool. We hit this hold level here, or we hit this one right here. What's going to happen is we are looking more to hold these levels, right? We know the backside is going to be a level of strength, so it's going to bounce us like crazy. And we know the front side is going to be a level of greed. So if we were to hit these hold levels, we would hit them until we break this trend. And then possibly we hit this hold level until we break this trend here, right? And then we move down because these hold levels are strength, right? It's kind of like the best entry prior to it hitting. So strength versus greed, right? So the first thing we have to dictate here is, okay, we've got this backside leg. So you just flip your chart and it very easily becomes, oh, this should be a big bounce moment. If we hit this level, we bounce right off of it, right? So, what we're going to do is we're going to kind of do the same trail of logic. We're going to go and we're going to mark the 4 hour. So we have the daily. So let's mark this red. So we're going to mark this one red. Okay. And we're going to go and take this and mark this as a 4 hour. So you've got, a 4 hour a 4 hour level, you have a daily level. And then maybe let's go to the hourly or the 15-minute and see where the next hold is. So you're kind of trailing down into what the possible hold levels could be, right? So then you have, there's not, okay, well, you've got a clear valley here, but let's see if this is maybe also a 15. Come on. Oh, trading view's frozen. Come on, trading view. Then you just click it a few times and it's going to go. I want to see if there's something a little higher. This seems kind of high. If we go back to the daily, what does this look like? You're right there. Okay, you know what? That works. I'm sure there's the next level down still seems kind of off. Daily, next valley's right here. Let's just go with this. Whether it's right or wrong, let's just go with it. Okay, so that's fine. So you have daily, 4 hour, and then your next down. Can we mark this as a 1 hour? Yeah, only if we do it here. Okay, we're just going to leave it, and that's fine. Don't want to waste too much time looking for the exact level. Anyways, that's fine. So when we look at this level and we say, okay, you've got the backside of a leg here, the backside of a bounce, right? You've got the backside of a leg. Here, we'll get closer to this, see what happens here. So you do have the kind of the first bounce, the second bounce. Third level gets hit. I wonder if it goes after a fourth level even here too. You can see it going after the holds. But this trend is already created, you see? So it actually bounces off trend. So actually, if you were to just simply inverse this chart, we know what the data points will tell us, right? So you have data points. These data points are telling you exactly what's going on in the move, right? If the backside of the leg is going to continue to hold, it's just going to be about the greediest entry, right? Once you get to that part of the move, that's the leg right here, right? You've got the leg that's going to break the move, right? So you have these kind of different set of holds on the backside of the leg. So if we know what's true about, and we can delete these levels now, that's fine. Just shows the example of, going after the greedier level, the backside hold versus the leg of the move, right? The front side here being the leg, this gray level right here, turn to blue, being the leg of the move, this being the hold level that's going to protect it, right? If we were to break this down again, you are going after this level right here. You are going after this break level so you can break the move and keep moving. If we can't break that move, what can hold us back, right? You have the backside of the leg here that holds you back. So we know that this data has a very specific logic to it, right? Backside is going to have a large bounce. Front side is going to have a greedier level that needs to hold over time, right? So we know that the data is telling us what exactly what we're doing. So actually, if you simply just went and inverse this chart, you can actually see the backside of a leg very easily here. So when you're looking at this and saying like, oh, well, why, what ensued this move? The rejection of the backside of this leg constantly. and the greedier entry on the trend that happens, I guess it was on the hourly. Yeah, so the trend here was already created. You see your trend was already created, and it hits the kind of the perfect level, the greediest it could be. So kind of, the holds of the move didn't work. The trend actually hit this level to perfection. And then so we have the levels that we talked about before, right? Where you're kind of catching a falling knife. Okay, so this is where it becomes very interesting, because now you've got data points. And again, data points, just to explain this one more time, data points are the information that we extrapolate off of the pieces of the move. Again, first we learned how to just take this easy stuff, like here's a data point. This is 76.36. That's a data point from the past. This is telling us we should bounce off this level because of reason X, right? So fine, we do. And then you have the other levels that we bounced off of. We hit 2 or 3 levels in here. The next one, I believe, was an origin level here somewhere. It was something in here. Let's go to the 4-hour. I can find it. Trading views being no fun. So you have that there, and then maybe possibly something like this here. Don't want to waste too much time finding levels. And so fine, we're just going to go and hit that next level. Oh, we fell right through. Okay, so let's actually go back to here because it skipped too far ahead. Okay, so finding the next level, not important for now. But anyways, we have the one level, and this is what's happening right now, right? So you create this right here. So you create your first trend like this, and it's going to have its own interior trend like this, right? So you're going to have trends that are being compressed, trend to trend to trend, this form of compression, right? So this is going to be kind of interesting because we're going to be talking about some stuff in future of trading. So you have something like this, and what are the data points telling you so far? The data points telling you, okay, it's trying to hold the move. You're still falling into distribution, and until you hard close trend, right there, until you hard close trend, you have something very specific happening. So this is something that you're going to be seeing in future of trading. This is your 1, your 2 to find the 3, right? So you can go to 4-hour level, see where this kind of valleys are, which is a cycle, right? What you're seeing is potentially the beginning of a cycle. So you have to understand that these data points, you have two marquees here. You have either the inverse level, which is right here, right? You have inversion of the move here, and you have the top of the move here. So the inverse level was already hit. So we can expect to go to the top of the level. If we do, we create our 1, 2, 3, which is kind of the beginning of a cycle, right? You hit this level here. That's the one, the hold of the move. You break the trend. You go after an origin level to create a new trend, which gives you your 3 point, which sets up the breakout in the future, right? So this is how you would have seen cycle starting in a move. Like this is where you're going to see accumulation happen. So we've already inversed that level. Let's see what happens next. We actually this trend doesn't exist yet. So, this trend does exist. Sorry, this one doesn't exist anymore. So you're trying to create a cycle here, right? Let's see what happens. You actually hit that level perfectly. So now you've started to create a cycle, right? So what we're going to do is we are going to take this. We're going to go to a very thin thickness. We're going to go here like this. Wherever this has its pullback is going to create our 4 break point, right? Like this, right? I'm sure this is the pullback here. Yep, that creates your 4 break point. So you've actually started to create a cycle already, right? So this was the 1, because this is where the stem of the move is starting. So that's your 1. Your first break move. Your 1 is the touch of the hold level. Your 2 is breaking the move. Your 3 is creating the breakout point for the future, your origin level. You can see here how it creates an origin level. Turn this up in thickness, right? We're going to keep adding thicker lines as time goes. What you're seeing in the moment is the creation of a cycle, right? So you know that as of yesterday, kind of the big moment in the charts is this level right here. This level right here is going to give you your breakout, and you're going to start to confirm accumulation. So again, data points. It's all about extrapolating what it means, right? So let's just go walk through this again. We come back, we hit a hold level, right? We actually break the trend of the move right here. The inverse has already hit. So we are expecting this to just fail down. So in this moment, actually, we can look at this, and let's rewind it a bit. We can leave all our levels. We can rewind this, and we can even look at the inverse levels now on smaller charts. Like, okay, that inversed the move there, and you already have a wick above it. So maybe let's go to the 15 minutes. This had inversed the move here. Actually, it inverses it perfectly. It actually inverts the move perfectly. And you could even use the 15-minute value if you want a little more accuracy. It actually inversed the move perfectly. So it's actually still laddering down. There is no kind of easing off the gas pedal at this point because they're data points, right? They're telling you what's going to happen. They're telling you that, okay, this is going to inverse the move here. This comes down, it inverses the move there. It comes down, it inverses the move here. And it's just continuing to inverse this move all the way down, right? Like you're just not letting up. You're constantly inversing a move until you come back and attack a valley. So these, like, again, the data points, this is just telling you it's still in failure until it ends up breaking a trend, right? So we can go and kind of work through this. It hits that again, pulls up, and I wonder if it's going to hit the valley here. Doesn't quite hit the valley. I'm almost wondering if it inversed off of a little micro time frame inside of here even. So we're going to take this one. Aha, inverses off the micro time frame. Still not quite there, right? We're still not quite there. We're still, we're in failure, right? He's still in this really, unhealthy moment that, hey, everything is in failure still. And so fine, you end up holding the move long enough, right? Pandora's boxing the move long enough to break that first trend, which we already have deleted on the chart. And it's, at this point here where you're still attacking that trend, and you can see how over time it's, touching the trend, rejecting, touching, rejecting, touching again. Now you're laddering up and hitting that same inverse. Now you've actually had one ladder up, you've hit the inverse. I actually wonder if you come back down now, even test this, which looks like, okay, it already did. So it already came up, tested that level there. I wonder if you actually even come down to here. Either way, you're still laddering up, right? So you can see how these points of data are giving you your information, right? At that point, you've hit it again. Finally broken trend where you can take your move, right? You finally broken trend and you can take your move, right? So we can just go back to the other time frame here, step through a few candles, and it gives you your origin point. Again, data points, right? What are they telling you? And this is what we need to now start understanding when it comes to holds and breaks. Because again, all I taught you guys last week was something very simple, was just, hey, here's some pretty spooky levels and why they work, right? But now we're going to do that same thing on smaller time frames. But we get the information versus understanding what the data is telling us. So now we can look at this and we can say, okay, now we have kind of this next point. So we have our 1, which is the catch of the support from behind, the 2, which is the break of the first trend, which creates our 3, which is, one of these two trends. We'd have to break it down in time frames. It's probably this one here. Yeah, this is the hourly. So you can see how trend is compressing it, right? Against the hold level here. Again, if this holds through trend, now we've already started a cycle. So we can talk about this moment like, okay, we've started a cycle. We've confirmed that we are going to hit support. We've broken a trend. We've created an origin level. So we've actually done a lot of the work to create the tone of this move. We've created an origin level, right? So we've created our origin level for the future. I'll spell it right. That'll help. We've created our origin level. What else have we done here? We have found support of the move. So we must ladder off this point, right? We must continue to ladder off of this point here. We've created our 3, which is our first swing, which is going to create the 4, which is the break of this trend here, which technically if this trend breaks, then we should be laddering up against that origin again, right? So now we're creating the 4 and the 5, and eventually you're just going to create, you've also created trend, right? So you have this, like this. Trend. So you've created all this data on your screen because you've created this trend here, the base support to the distribution candle. So you've created trend. So you can see how you're creating these points of data that's telling you what's happening. And meanwhile, it's just kind of like, oh yeah, this is basic. It's a cycle. But the data points are showing you what's happening next. So now we have the story of what's happening. We have an origin level. We are trying to create an accumulation cycle. We are successfully doing so, right? As long as we hold the move. So let's see what happens. Still reject trend. We still reject trend. Adapt trend out, right? So we still haven't swung up, so we can adapt trend to here. And it might be even be a smaller time frame trend. This was kind of a warning sign that this move might be breaking because all of a sudden, remember how I told you guys, trend is accurate, or a trend will exist until that moment it goes straight. So even if it's right here, even if trend is, a small ladder off of it, it can still exist, and it will until you break the leg of the move. And here we break the leg of the move. So we actually broke our cycle. This is now gone, right? This origin level is still there. That's fine. This is no longer a 3. There is actually support is now here. So actually now we have to kind of move this to here, right? Now we have to make a new trend, a new 3. We actually don't have any of that. What we have is just a single origin level, right? So then you come back again, same thing. You're finding lower and lower supports, right? So you're just laddering down off this move still. So what looked like it was a successful trend broke right here. So accumulation was dead in the water right here. When you actually broke your origin creation, which was attempting to create an accumulation cycle, you actually broke the move, right? So then actually at this point, it's not much further that this goes down. So, and then, even if we want to take away all of this stuff here, so even if we were to just dumb this down to kind of really be simple here like this, let's go like this, delete all that stuff. We are to dumb this down to be real simple here. You know what we could have saw in this move? We simply could have seen another data point tell us what's happening on the move, which is the inverse here. And I wonder if there's even a better inverse to go off of here. So let's walk through the trail of this move. Okay, we don't need this level anymore. Okay, so you have this inverse here. That gets hit. It pulls the move back. So where's the leg of this move? That's how we would start by identifying this. Leg of the move. Well, okay, you can see the origin here. The inverse here gets hit perfectly fine. This is going to be pulled off of perfectly fine. And it happened, and it actually falls a bit short. Wondering if there's a different origin here. There's not origin, inverse level. Doesn't look like there is. It looks like it was just front run a bit. You could say it's right here, or you could assume it's one of these levels, but in the moment here, I'm looking at this, and this is the start of right here, and it doesn't quite reach. Come on, it doesn't quite reach this. I would simply look at this as here's the inverse level, and it doesn't hit, and it starts to pull back off of it, right? If it simply can't hold this part of the move, right here, if it simply can't hold this part of the move, you're dead in the water. And where's the actual origin point is right there. So if it can't hold this, you're kind of dead in the water. You've got this front side leg, but you've already broken all of your points of data from before, right? Like you've created the cycle of accumulation. You attempted to hold this move, and it did attempt to go into accumulation in this moment. It did attempt to create an accumulation cycle, and it failed. So the moment that we have, right, you have this attempts to make a one, it fails. This attempts to make a one, it succeeds because it breaks trend and actually does create an origin level. So this is the moment where we're saying, okay, this is possibly creation of what could be accumulation. If this gets broken, remember what I told you about trends. Again, we're just going to go through this one more time. Remember what I told you about trends. As long as you're not flatlining, you're good. You can even create a trend like this, and it's good. And that's exactly what happened, I think. You created that first trend somewhere on the hourly candle here down to this point, and it was still a trend. That's fine. It's still a trend. But the next candle down, it breaks the move. So it's almost like when this gets touched, this yellow line gets touched, which is this right here. You could either see this as, oh, it's touching the hold level again, or you could see this as what it really was, oh, this is an accumulation cycle. So if we are going to break out of accumulation, we're going to do it off this hold level, which means we have to create a ladder. We have to ladder from here to the next point, which even if it's here, it's fine. It just makes it a long-term trend that has a long time that it can build support to break this move, right? Like you can just see this fray out, and it can ride this level all the way out here. And that's fine. But the moment it breaks, what is that data telling you? It's telling you there's a failed cycle here. There's a failed accumulation cycle. So if that's true, then should you not just be looking for the inverse of the move, right? So there's no 4 hours. So what does the 1 hour look like? There's not even really a 1 hour. There is, and it's right here. That already gets hit. This is the untested 1 hour somewhere in here, right? And that's the ladder from, whatever point up here, and it ladders to here, and to here, and then to here. And so your data points are telling you, right? They're telling you, fine, I just marked the base of this candle, but it was actually a little higher. We know that it didn't quite get hit, and that's fine. It gets front run, or maybe, people are too spooked because they see the accumulation cycle break, or for whatever reason it happens. And then we just fall off a cliff right to the next level, right? We fall off a cliff right to our next level that can hold it.